Good afternoon, everyone. My name is Dan Mcgrew with Mortgage Machine. Very excited today to share with you our special guest that we have. Tim Anderson's joining us today. We're going to talk about digital mortgages. That's a big phrase, big term. Everyone's talked about it. We're going to unpack it today, and we're going to demonstrate for you today how Mortgage Machine can provide that digital mortgage experience for you. So thank you very much for joining us. First, let me introduce who we've got here. I have Crystal Stanton. She's going to be running the rodeo for us and making sure all the controls are in place. Hello, Crystal.
Hello, Dan.
How are you?
I'm doing great today. Thanks.
Good. And Tim Anderson. I'm sure many of you know Tim Anderson. Welcome, Tim, and we're glad you're here. Tell us a little bit about yourself, please.
Sure. Thanks, Dan. Thanks for having me. Well, I've been around this rodeo for about 30 years. Germane to this, I kind of got hooked on the e-mortgage, digital mortgage thing way back in 2002 when Fannie Mae said we got this thing called a Smart Doc eNote. And I go, I don't know what the heck that is, but if Fannie Mae is pushing it, well, I'm in. So I started with a doc prep company and I've been pushing E ever since, thinking I'll use Harry Gardner and a few other references that it would be 3 to 5 years. We just didn't know which 3 to 5 years, Dan, and we're still working on it. So.
That's exactly right. So, you know, you and I have talked many times about smart docs and what they could mean, and Mortgage Machine does have our own smart docs, and we're going to try to get to the place where we can educate folks on what that really means and what the real value proposition is, because I think everyone knows that if you're going to produce an eNote, you've got to have a smart document, and we're going to show you an example of what that looks like. But before we get started, let me just give you a little history on Mortgage Machine. It's a 16-year-old LOS. It's not been commercially marketed until recently. Some of you may know the name Jeff Bodie. He's considered one of the e-closing pioneers in the market, and he built this LOS. It was people built it 15, 16 years ago, and decided that he wanted to market commercially. So that's what we do. We refer to it as an all-in-one LOS because it provides you with everything you need to produce without a tremendous number of integrations. As one told me, you don't have to have the 1,000 paper cuts in every integration out there. We have everything you need from the front end, point of sale, to capturing the lead, to our own pricing capability that we now are using AI to help with, e-closing capability. You can do any version of e-closing, whether it's a hybrid, partially electronic, partially in paper, wet ink. We can produce an eNote. We provide the eVault. You can store the eNote in the eVault. You can close the loan using Ron, and then we also have we use AI capabilities in our data management system that we also have. So as we go forward, we'll show you bits and pieces of Mortgage Machine and let you get a flavor for what it looks like. But we're not going to show you every category. More interested in having Tim talk to us about digital mortgages and all that's involved. So with that, let's talk about digital mortgages, talk about the smart docs, Tim, and let's see if we can unpack for these folks a little bit about how this is really sort of, if we're not the first, we're pretty close. So let's talk about that if we could. Educate us a little bit, Tim, on digital mortgages as a whole, please.
Sure, Dan. I mean, so look, I know a lot of people have attended have been around for a long time and they know what a digital mortgage is. I think the nuance here that is something new to market is this is one of the few LOSs that is fully integrated the smart docs. And again, not just the eNote, but all the docs can be smart. And I think that's the difference here is that, and why that's important to anybody. If you're going to get to the Holy Grail, whether you're originating, closing, or selling the loan, people need to know that the data on the documents are compliant. And this is getting to the core of the essence of putting trust into the process. So smart docs, and why it's unique now, because we just Mismo passed version 3 earlier in the year. Version 3 finally gets to what we call kind of nirvana. It allows you to have the source XML that you generate out of your LOS. And everybody LOS is kind of starts E and stays E. But what happens is outside entities update, sometimes rekey, sometimes different versions of documents get executed. but we have it pretty much electronic till we get to the closing. So normally when you finish it in the LOS, clear to close, you've done, you know it's good, it's compliant, at least in terms of your LOS, which is your system of record. But then it goes out to closing in some black hole, and nobody knows what happens. And so now you've lost all that pure data that you have verified as compliant. And then somebody then has to take those documents, because we go to PDFs, and on the back end to an investor, they got to make those PDFs smart again. So they literally, use OCR or AI now, which is the big buzz, but they're taking dumb docs and trying to make them smart again so they can re-underwrite them before they fund. So this difference is we never lose control. The smart docs retains the source data, date and timestamp. Every time those fees get updated from the title system, they're updated in the title system and the lender system. They're as current, complete, and compliant as possible. So for most people that want to ensure that the data and docs not only match, but the data is actually contained inside the document, it is pure as it can be. And that data travels inside the document. So whoever touches it, you're working with the most current doc and data set. And when you sell it to the investor, they don't have to OCR it. They literally can see the XML and be able to verify just what you closed on. So what you closed on and what they receive should be the same. And so it's going to radically change the way we do business, because now everybody can trust the data in the docs all the way through the process.
So one of the issues, Tim, I mean, that's clear. And you and I have talked about this years and years ago, the value of what if we can take the same format that an eNotes produced from and produce that across the board. And that's what we're talking about here. But what would you say would be, the biggest issue for people to embrace this? Because it's a mind shift across an entire industry. I mean, you and I both know how hard it's been to get people to adopt e-closing. This is a concept that's certainly not something that they've seen going to MBA annuals and everywhere else. So how hard do you think that it's going to be for people to get their arms around this kind of a different concept?
Well, we tend in the mortgage industry, there becomes kind of a tech trend, right? A couple of years ago, blockchain was the rave. Now everybody's talking about AI. We've kind of, digital mortgages have kind of faded away because it's like e-closing. I think when people think about e-closing, they just think that the documents are going to be e-signed and e-notarized. Okay, that's great. That's good. They can, be paperless. But again, if the data on those documents still need to be re-verified, there's where the cost is. Again, if I've got a OCR and I'll give you an example here, and Crystal will demonstrate, if I know at time of app, and this is where the TRID law with CFPB really should have happened. When we did the original e-mortgage pilot, what they wanted to do was say, hey, we want to be able to have machine readable documents. We can verify every point in process that you have a consumer that acknowledges or accepts legal documents, including that audit trail, which becomes part of the electronic evidence, that vault. Again, having an integrated vault in the LOS retains that. So at time of app in a world is that I've got to literally deliver to the consumer a preferred list of providers, if they don't want to, that they can shop for, and one of them is title companies. If I can engage the title company right then at app to do the LE and every version of LE if the data changes and the final version of the CD, you are TRID compliant, because that data is shared across the title system record, which normally has the closing fees, and the LOS that's just repurposing them in their docs. With smart docs, it bridges those two. So if a fee amount, closing amount changes, that might change that 10% tolerance of TRID, it literally knows both systems of record, the LOS and the TPS, title systems, are always going to be current compliant. So again, it isn't just about going e-sign and digital. It's ensuring to all parties that, again, these data and docs are as compliant as possible, because when data changes, the docs get updated and a date and timestamp occurs of literally going back and see who changed what. I'll give you one example. We had a couple years ago, fraud actually took place. Somebody actually came in and changed some of those fees through an unauthorized source. But because it was done electronically and it was retained in the vault, this is a state of Oregon actually came back and said, we could see through your date and timestamp in AE vault who came in and changed that fee and made it non-compliant, and they could track it down electronically to a date and time and an IP address and got the person that committed that fraud. So it has huge benefits beyond just being able to ensure that the data is in sync, and it means the same thing to all systems and is shared, but it also gives you electronic proof of compliance, especially if you're buying loans from a third party that you have no idea how it was originated. Did they disclose properly? Did they deliver the docs in the 3-day delivery? That's what's retained in your system and updating in the vault when you originate and sell that loan. So big difference in terms of what you guys can do.
All right. Crystal, let's pull up we have an LE we can show them that's smart.
Absolutely. Let me go ahead and pull up my screen. So can you see my screen now, Dan?
Yeah.
Perfect. So I'm actually going to go in to Click and File, which is our document management system that's powered by AI. Pull up one of my demo files. So I'm going to go ahead and show you what it looks like to upload an LE Smart document and how the system is able to read that and then display the PDF version. So in uploading from here, the only fields that are actually necessary are just the stage class and the subclass. So let's go ahead and pull up an LE and I'll pull up my file. So here you could see the file that's attached is my LE, and I'm actually going to show you what that looks like. So this is the file that I'm uploading. You can see it's fully coded in that XML format. And I'll go ahead and upload it. And it's that quick. The system read all that coding and it's now displaying that in a PDF friendly version.
So Tim, this is an example of that we're just showing right here. This is obviously not an eNote that people have to have. You've got to have the smart doc to generate the eNote. But this isn't. This is a loan estimate. So, what is your opinion about the value on the front end, and how important that should be to the lender?
So there was just a study published recently about the cures that are made after closing when the fee data disclosures aren't correct. And a lot of times they just don't get the last payment in there or whatever. But again, that because the data is not always synced in a continuous line like we do, and it goes offline, things happen. And so these curative, somebody's writing a check at the end of the day to bring it current to say, hey, you're right, we didn't calculate that right, or we didn't disclose that right. Somebody's going to eat the cost, and they cut a check to finally bring it current. In your system, it never has that chance of going offline. So like an LE, it's, from and I use the title relationship because that's where you're going to get the closing fees. And then through the LOS is where it gets updated because you're literally kind of starting with an estimate. But again, what TRID was supposed to be with the LE and the CD, it was not supposed to be an estimate. It was supposed to be as close at time of app as you could get to closing within a 10% tolerance. So it was supposed to be accurate from day one. So if you don't have like a smart doc where those critical data fields can be shared between who provides that source of data, in this case, closing fees with the title agent and the lender system, you're always going to be out of sync because somebody's manually or updating. I hope they catch it, when you hit a tolerance reconsideration and have to recalculate. But here, because documents are smart and you have a rules engine runs it, every time the data goes beyond that 10% tolerances or the fees get updated, it's going to go out and request that updated data and redisclose. So this is how you can automate again compliance in the process by using a shared document called a smart doc across the critical systems that maintain that data. And what's cool about that, then your system of record for the LOS matches the title system that's going to do the closings as well all the way through. So you don't have these issues of closing and say, oh my gosh, I don't even know what version I'm on, right? Because data can get updated differently from a document. So I could always be, my system may be current, but I might have not generated those documents until 5 days ago. Yeah, sometimes they can get in sync, but sometimes they don't. So the beauty again of the smart doc, it is literally date and time stamp snapshot of what occurred that day and time, and it's tracked in the vault and your system of record to ensure that any point in time, especially if I'm an investor, if I want to go back and say, hey, did you disclose that loan properly to your customer because I'm buying it as a third party loan? You literally can give them access, and here it is. So if anybody contests this loan 5 or 10 years down the road, you have electronic evidence of proof that it's done compliantly. In a paper world, even a PDF world, you don't have that. You just got images. You have data that gets updated, but the images are what you really see in a file folder. The data gets kind of lost somewhere normally. So,
what do you think? What do you think, Tim, is the most important, the most important aspect of the smart docs, as if we were going to look at it and say, it's mainstream? Well, it's not, of course, but where do you think the greatest pickup or the value is? Is it going to be on the back end, or is it going to be more from the originator's perspective? What are your thoughts? Is it going to be the investors being, they're like going to be more clamoring for this, or do you think it's going to be the originator that provides them the confidence of every loan? We're not talking about the data before it gets into the LOS, but that the data is always accurate. What's your thoughts?
well, there's a benefit to both the originators and the investors, right? On the origination side, I quit talking about e-closing and e-sign, and if again, I'll plug the LOS here. If you have an automated way to verify that data, and that data is smart in an agreement, like an appraisal. I mean, you look at the original technical smart doc that we developed for the industry was the appraisal data set. That was data, right? To make that 1008 accurate. Every document then that needs to be verified should be smart because that data gets pulled into an automated underwriting system to be verified, right? So now that I have data and docs that I can be self-verified and run it against my compliance engine, I know from origination perspective, those are going to be totally compliant because I'm not keying in information. I'm not scanning docs in. I'm not, it literally is system verifying to the IRS and employment and credit, system, source data to source data within the document, and the system gets updated electronically. That's how you get to a 10-day close, because you eliminate these faxing and FedExing and keying and manual entering of data. When you go system from an app all the way to closing, to retain all that data, verify it in your AUS with AI, and be able to get to a 10-day closing, because you're streamlining these documents that are dumb that you have to make smart again or having to key in data, eliminates all that. So you can really perfect the process to a very streamlined app to close process. And that's what I was going to think about. We can get to a 10-day close because it's fully automated. All the verification is electronic because you're dealing with source data to source data and as current as possible. Knowing that and retaining that then, and not papering out or going to a dumb doc at closing, that's what the investor wants to see too. They want to say, hey, I want to make sure that data that you closed on is still investor compliant quality to me. So where I think this is fundamentally going to change this, if you are a delegated underwriter for an investor, in other words, they trust you and they trust your system to underwrite on their behalf. Now I'm taking the investor docs on top of that, doing smart and doing an investor underwrite to make sure that we not only originate and close the loans on our quality, on our guidelines, but now if I'm selling to Chase or B of A, I take their underwrites in there and re-verify it against their guidelines, again, data to data, to do an investor review, lock it down, and then you can provide them that audit trail, that compliance report that said, here's everything has been verified, here's the data was verified, these were the same docs that were signed at closing, this is, again, as current as possible, source data travels with it. Once they verify that again a couple times, they won't do it again. So now you get into next day funding. And that's where I think the big pickup is, both from originator, from a client, I could close loans quicker, but I can also fund quicker, right? If I can get to a 10-day close and next day funding, you've won the war. You've got a huge competitive advantage against people that are still processing paper images, right? So the next thing I would do, Fannie and Freddie buys an eNote, but that's the problem. Fannie and Freddie only care about that one doc, and that's why the industry said, hey, we only need one doc and be smart. It's the eNote. Well, other investors want to see the other documents because they're worried about third-party, risk They're worried about the disclosures. They're worried about other data on those documents they're going to be purchasing. So what do we do today? The big revolution is, hey, we got AI to take against your dumb PDFs, automated underwriting system to pull that data to make it somewhat smart to revalidate against your investor guidelines. And because it's so antiquated, we only do it on maybe 10 to 20% of the loans, because AI it's good, but and OCR is good, but it's not 100%, and it's not really scalable because you're dealing with a lot of documents, right? So we go 20%. So any company that would be building like an airplane and said, we're going to only audit 20% of the rivets in that plane, I don't think it's a very good process, right?
I'm not
We
flying
don't
on it.
accept it in the industry. mortgages, that means that 80% of that file you haven't even seen, right? I'm just going to buy it, because I just don't have the real good. Now with this technology, 100% of that data, 100% of the documents can be verified before they're closed and prior to funding, but they should match, right? If you have this thing perfected. And if I go, that's the value of e-closing. If I never paper out or go to PDF, I retain that electronic evidence of compliance from originator to investor all the way through. It's a beautiful world.
Hey, there you go. There you go. All right, let's pause that for just a second. Crystal, let's go to, if we can put up on the screen, please. And for the folks that have enjoyed listening to Tim, we're going to come back to him in just a minute, but would you just go through the top ribbons so that people can sort of understand all that's in Mortgage Machine, please?
Sure. Absolutely.
And then I want you to stop we're going to go back and we're going to show them a little bit about pricing.
Okay. I'm going to just take us off screen so we could see that screen a little bit bigger. Okay. So this is the home page, and this is what you would first see when you log in to Mortgage Machine. And I'm going to draw your eye to the top ribbon. Now, those are the milestones of the system, but I do want to point out that the system access is role-based. So on my screen, you're going to see longer menus, and that's just because I have all access. And I'm going to start with the loan tab here. And as I hover over it, you can see the subcategories or pages populate below. Here you can see where we can import and export loan data. We do have multiple queues throughout the system. Here you'll see 3 of them, with the disclosure queue, the QC review queue, and the wholesale review queue. In addition, we also have a loan batch feature. Now, the loan batch feature allows you to execute key loan actions across hundreds of loans in just minutes. You'll also find your activity history, and that's going to be like the audit log for your file. You'll find your forms and your HMDA, your lender notes, and of course your QC findings and exceptions there. Under origination, this is where you can see a summary of the loan, submit to processing. You have your pricing and lock information, your loan fees, your QM overview. You'll find your processor tracking screens, and of course all your IRLA information. Now, I do want to point out that Mortgage Machine is a very self-contained platform. So with these interfaces, you can order an appraisal. We have desktop underwriting. We have early check, LPA, LQA. You can request disclosures. We do have an integration with DocMagic. You can order your flood certs, add MI, as well as activate MI from Mortgage Machine. Next, you could see our underwriting queue and that workflow. You'll find your doc prep queue and that workflow, your post-closing screens, and then your reporting options, where we have a library of pre-built reports that come with the system, but each user can also build their own custom reports. And then of course, our integration with Tableau. And to finish off this top screen here is our pipeline view. And this is a great view that allows the LOs and processors to see all their loans at a glance. We built in a configuration column here, which allows them to add or remove any fields they like to hide or display, as well as reorder how those fields are displayed, however best they want to see their own view. So that's just a quick overview, Dan.
Okay, can you move over to pricing and talk about that a minute?
Sure. So what we're looking at is our pricing and lock screen, and I'm just going to scroll down. And below here, this is where you would see the available products and pricing for my particular demo borrower. I do want to note that we do have our own pricing engine that can reprice in 15-minute intervals with either MBS pricing or agency. And Dan, did you want to talk more about the different pricing options from here?
So this this engine is got some flexibility to it. We've recently made some significant enhancements for those lenders that sell to a lot of aggregators, not just as the GSEs. And so what we basically, the way that we handle it for those that's their model, is that we will find out who the investors are that they sell to on the front end. We will upload those into Mortgage Machine for your account. And then we use AI we will get and receive, and AI will make this a daily update of all the daily pricing. Will go in for whether it's 8 investors or 15, it doesn't matter. We have an AI tool that will go in and upload those new prices on a daily basis. So you basically have everything that you could want to be able to accomplish, real time. Crystal touched on in 15-minute increments. But daily, you're going to get the kind of pricing that you want for those that you choose to have uploaded into the system. So thank you, Crystal. I appreciate that. We're going to come back to you in a minute and talk about the data management and how really cool that is. Tim, let me come back and ask you a question. I think that you and I, we've talked about this for a long, long time, but e-closing was something that was, for the longest time, you and I both, we've both been the biggest prophets out there of the value proposition and so forth. And, from an adoption standpoint, I really don't know the latest numbers of what percentage of people, close eNotes. Do you have a figure that's current in your thoughts?
Yeah, I think it's still right around, well, it's less than 10%. I think it's right around 8% of all loans.
And what percentage do you think are just doing hybrids in addition to not doing eNotes, but just doing hybrids?
Probably 85% is hybrid,
85%?
Yeah, the eNote itself, and I'll pontificate here again, it's one document, right? And not to berate Fannie and Freddie, but if you've got this whole process requiring around one smart doc eNote, and they have to eVault and all this, MERS registry and everything, it's a lot to do around one document, right? But if you're selling to Fannie and Freddie, it's efficient. What I was talking, rattling about earlier is, but what if I could do all the documents that way, right? Now I can assure that the data quality and compliance on all the documents that you ingest electronically are as pure as they can be and as compliant as they can be. And that's where the other traditional, investors play. They want all those documents to re-verify compliance. Look at non-QM. Non-QM doesn't have the Fannie Freddie day one certainty process. We can build that in for a non-QM loan for those investors, right? And give them that same efficiency and rep and warrants that you get with Fannie and Freddie. I'm going out there a little bit. But you can do that because now that you've built trust into the process and trust in the data and documents, I can actually, hopefully, price it. Again, let's take price out of it. If I can fund quicker, it's a huge competitive advantage for everybody because everybody gets paid sooner. Turn times shrink. And again, every time you have to sit there and run through your compliance check, AI or otherwise, post-closing, and it takes 2, 3, 5 days. And again, I don't know what percentage are going to be kicked out because they're not necessarily a bad loan, but somebody didn't sign something, or I'm missing page 2, or the scans came in really bad, right? Happens every day on a majority of loans, so they don't get funded right away. And even today, because something's missing, and again, you miss that window because you're going to turn that and sell within a 5-day or month end or whatever that window is to commitment to the investor. And that loan's on hold till you can perfect it and go back and say, hey, I didn't get this and this because of the trailing doc issues. That loan doesn't get funded. It drops out. All of a sudden, now you've got to refi another loan. All those things, the secondary inefficiencies, literally almost go away when you can go to a full electronic origination, closing, and investor, buy, delivery, and purchasing platform. Shrinks time, it shrinks errors, it shrinks buybacks, it shrinks turn times. And then the final thing is here, and by the way, we're not talking about all this issues with fraud and funding. Again, if you're dealing with the real documents that you can certify are compliant, and again, in an e-world, there's a lot of fraud when you go out, people say who they are, and you get They're sending out legal documents. Someone intercepts that email, gets the funding. The email happens every day. These funding issues, right? Gets eliminated because you're in a very secure environment for all parties that authenticate who you are, what you see, what you should get, and when you get it. So it's just a much better environment, especially in this world right now when the volumes are so low that any loan that gets kicked back on a buyback or falls out is a major impact because there's so low volume right now. I'm counting on that money to come in so I can fund the next loan that comes through. So it's actually as important in a low volume environment as it is a high volume environment right now.
Don't you think that if I'm originating and I had a digital process and I had confidence in it, my investors had confidence in it, that it's also going to help me improve that number. The NBA came out with a number that said, I believe it was last year, there was lenders were taking losses of $2,300 per loan, and the year before it was $2,100. So it's not going the right direction. This was their numbers. If you can have the confidence in smart documents that you are not having to produce the paper that you've typically done in the past, but simply for the accuracy, you mentioned the buybacks, but also the personnel can, be reassigned into other areas that you pick up a benefit. Don't you think that adds to a more efficient process as a whole for the originator as well as improving the bottom line?
Oh yeah, well, and back to somebody that's not, practice what they preach. I mean, Bodie's got some great stats on that, on how he took kind of a manual mortgage company they purchased. I think there was like 24 funders, and don't quote me on those numbers, but brought them in with your automated process using the platform. I think he came down to about 5 that were doing the same number of loans. I mean, right there. And again, he didn't lay those people off. He reallocated them into other areas that you needed to do it. So people fear that you're going to eliminate jobs. No, you just make it more efficient to do your job. So one thing I don't understand about Ron, which is a little bit different, but Ron hasn't taken off either. And I don't understand why, because again, we just don't have the volume. So I guess you can, manually, for the few loans you do, you can go out and drive for 3 hours and get a closing done. But I mean, think what you could do if you do Ron. I mean, so if you, again, the system's electronic, the digital electronic, and all parties are video enabled, you can streamline so many of these costs that take time, right? It takes time to produce docs. It takes time to tag docs. It takes time for someone to manually view docs, all this stuff that we do manually around dumb paper docs, right? The execute docs, wet sign. The second person doesn't show up. Well, then I got to reschedule. And that's twice the cost for closing. All this stuff kind of goes away in a digital world. And I think the trouble, and I'm not getting younger, Dan. I mean, I look very young for my age, but it's amazing that people operationally think in terms of how we've always done mortgages. And I think the hardest challenge we have here, once you got a system like you have, is teaching people that you don't have to do those. Most things are based around paper. I remember the first designed LOS was to mimic the 1003 form. So the screen became the paper form. And that's what the LOS was. And I don't think things have changed all that much. You think about it, because the screen need to look like the paper forms. And we're keying stuff in. All we did was take it and key it in. So, well, there's our electronic mortgage, right? Well, when the forms now kind of go away and it's about the data, and the only time you got to present a form is because it's got to be executed because the county wants to see a form in that format, it's the reverse way of doing business. Now everything's data driven, right? And the only time to produce a form is when somebody's got to sign it. So it's got to be recorded in the format that the county in. But I think it's going to get to certified data, because now I can actually prove with smart docs and a system that validates it. I can show, again, what did you verify that against? When did you last verify it? Show me with the date and timestamp when it was verified. And if I can literally do that up to just minutes before we close and get it signed and never print it out because it gets locked down at that time it gets signed, it's protected so it can't get changed downstream. People just don't think They just don't. People are in silos. I'm an originator, I'm a closer, I'm an LO, I'm an underwriter, and they will defend, and they should, that skill set. But those systems, we got automated underwriting systems, we've got AI coming in, we've got a lot of systems now that are technically kind of replacing those routine. Well, how do you add value? Well, bring in a system that eliminates those paper process, but keep those skill sets, because at the end of the day, the system still needs to be verified. People still need to make sure that the rules are current and the guidelines are updated and the pricing's, still valid. So we're not eliminating jobs. We're just making it more efficient and reducing time, risk, and cost. That's what this does. Time, risk, and cost. And if you can do that, you're going to survive this downturn, because you see what's happening out there with the realtors, in the title world. Regulatory agencies, quite frankly, are making it more expensive, not less, because you've got all these regs. And if I can now automate those regs, build it into my logic on how I verify data, have electronic proof, it's foolproof. It's amazing. But people in their operations are operations people. They don't have innovators coming in and say, hey, how do we take E and do it better, right? That's the piece we're missing.
Right, I agree. Well, sticking with with the example that you used, Crystal, we want to take a look at the data management AI driven tool. The story that you were referring to earlier, Jeff likes for me to talk about, is he had 3 people at the time, and it was doing about 750 loans a month, and he bought a company half his size that had 27. He brought the combined entities together, continued doing the same volume, if not more, and he did it with 3. So he didn't have to do it. So one of the areas, okay, is on the back end when you're shuffling paper around and having to stare and compare and make sure everything is exactly the way it's supposed to be, right? So Crystal, if you would, let's show them the data management tool, please. How you can manage batches and splits and everything, please. Can't hear you.
There you go. Can you hear me now?
Yes, ma'am.
Awesome. Okay, so I'm going to go ahead and go into click and file. So right now I'm looking at a file, and you can see that the file is the loan profile on the side. All the documents are indexed. And what Dan was referring to is the ability for users to create their own custom templates for stacking and batching orders. So I'm going to do a real quick run through on that. If you wanted to create your own stack, of course, you have a pre-built library to access that you could edit as needed, but to create a new one, of course, you'd want to give it a name, select the stage, and then select the class and subclass in the order that you'd like it to be presented. And you could do a search, and I'll just do a quick random stack. So from here, you would just fine tune it. You could remove anything that you didn't want, mark anything as required, and then fine tune your ordering. And from there, you would click save. And then once you have your desired stack, you'd want to tie that to a batch profile. And you can tie it to an existing one that you've already built by editing it. But if you wanted to create a new one, of course, you'd want to give it a name. And then you would go in and select the stack you just built. Now here you do have the ability to set SmartDoc settings. So you could include them in your batch and export them as the PDF version that we've viewed, or as the XML version that we also viewed, or you could choose to exclude them altogether. Along with that, you have the option to set your own SFTP settings, and then your file naming convention. There is a default setting, but it's fully customizable for the prefix, the name and suffix, as well as the separators and the date format. And from there, you'd be ready to batch it out. Select the batch that you just built, and then go in and pull out or put in the loan numbers that you're wanting to batch out. And you can download as a zip, send as a bundle, run a report, or run an audit from there. Dan, is there any other topics from the split? I could show splitting the documents. I didn't get a chance to show that yet. Are you okay if I show that?
Sure.
Great. Let me go ahead and pull up my file. Okay, so this is my demo file. And all the documents have been pushed over and they're in the loan profile and are indexed to the side. And I just have a mock document here. So this is a merged document with some mock bank statements, your credit reports, and in here we also have some pay stubs. So again, if you wanted to manually split those, I could just click into here. And if I wanted to just pull out my bank statements, which I know are pages 1 through 4, I could simply just add 1 through 4 here and click split to pull those out. I do have the option if I wanted to reorder them in that split, I would just go ahead and select them in the order I wanted them to display. And from there, I could click split, select my stage, my package type, and we'll mark this as my bank statements that I'm pulling out. And you can see the system will automatically give it a file name based off of what I've selected, but it is customizable. So I could go in and adjust that. And from there, I could split them out. And once that processes that and it splits that into a new document, you're going to be able to see that this is versioned over to the side. So this would have been my original version, and now I have a new version that is showing that my document is now only 7 pages and my new split document is here. Now we also have, or the system is set up with AI indexing. So the system can basically upload a document, identify where the class and subclass is, and separate that into separate documents. And I'm going to show you what a completed AI split looks like. We're going to go ahead and look at Miss Sarah Connor's file. So here you can see again, all the documents in the loan profile are indexed. This is my original file. It's a 110-page skinny file with all my documents that were merged into one. But if I look over here on the side under properties, let me shorten that so you could see it. It'll let you know that it was split and analyzed by AI. It also notes the date and time that that happened. But here you could see a tooltip, and that tooltip is going to show me the indexing of how it split that package. So here you could see my 110 pages, the stage, class, and subclass it put each document in. And then each document also has a hot link. So it'll take me directly there. And any document that is split by AI will also have that analyzation note. So here you can see the date and time it was split. And it also has a tooltip, which is going to be able to lead you back to the original file it was split from in case you had multiple uploads from there. And so that's how we manually split and also do our AI splitting.
So,
Thank you, Crystal.
Dan, I'm going to jump in for a second. An observation here. I think one of the value that I just saw is, again, since this was kind of built by a lender, this has the logic for, like a large lender has multiple channels of business, right? Wholesale, correspondent, retail, maybe a consumer direct. And what's neat about this is a all channel product platform. So if you are doing all channels, you can build in the business rules and logic. But the key here on the investor piece, and it's been a while since I've seen these archiving, these OCR archiving systems. But one of the worst things they could do is that you get this blob. Crystal shows a blob of 200 documents in one blob, and go, I need to look at the note. I need to start parsing stuff out, and that's where the OCR and all the stuff kind of comes into, and it's painful, right? Bam, like that with AI, you guys have done that. So any investor that wants a stacking order tailored to the way they want to do it, you could do that. So again, that flexibility and the logic built in the system, it's designed for multi-lenders, multi-investors, multi-channel. It's pretty slick.
Thank you, Tim. One of the other things I was going to touch on is that, to do the common theme and method of doing things for the longest time has been that, each each lender has their trading partners that they do business with. They have their vendors for various things. But at the end of the day, I mean, if there was ever a time, and I'll get your opinion on this, Tim, but if there was ever a time when people were going to look at their systems and go, you know, it may be a value if we could do a lot more with less. It could be valuable to do anything that we could do to lower our cost of origination. And I mentioned the numbers that came out of the MBA just recently. You absolutely are going to be able to lower your cost of origination with this LOS for a variety of different reasons, which I would be happy if anyone's interested to talk, contact me, and I'll be happy to show you. We can dive deep into this. But if you don't have the same level of cost that you have for, all the other partners that you have, and you can accomplish everything that is necessary in one place, okay, and you get a digital experience from it that we've talked about at length, don't you think that has to have some value, Tim, especially today?
Yeah, I think there's in special light today, I think there are some large aggregators out there that, because you've got hundreds of customers using the platform, you're going to have to give away some of the customization and functionality to be able to support a system like that when you've got 100 users using it in a SaaS or web-based platform. So that ability to differentiate yourself through your different, like what I've seen, the customized tools that make me unique to me being the originator in terms of new products I want to offer, and also my negotiated relationship with investors. They're going to have to treat them pretty much the same if they're going to support hundreds of customers and a scale where you're going to lose a lot of that customization and tailorability. So this is kind of putting some back that said, hey, whether I'm large or small, I can take a system, adapt it the way I want to do business to my customers, the retail side of it, and then I can negotiate the way I want to do business with my investors, hopefully fully electronic, which should, again, reduce errors, risk, and omissions. Hopefully, again, I don't want to mention price, but again, if I could fund quicker because I'm eliminating a lot of these data and doc issues, right, that happen every day, it's huge. It's huge. Because like I said, the end of the day, this is a manufacturing process that doesn't end at closing. It kind of ends from the originator standpoint, but it begins at closing and funding to the investor, right? And I'll plug it in even the warehouse lenders. So if I can even fund quicker with our warehouse line because they have a copy of that note, holder of that note, again, expediting the funding. It is about speed, efficiency, and reduced risk. And if you don't have a fully digital system, again, it's data, docs, and the intelligence to verify it properly, right? Based on whoever is buying that loan. And then finally, the electronic evidence to prove that you did follow it, right? The underwriting piece or origination. Those are the pieces that are missing in a lot of these LOSs because they go out to different systems to get that, right? You've got a very much common system of record and what we call kind of the source of truth because it keeps it all the way for all parties. So people come in, they're updating data, but you never lose control of that data in the docs, the integrity, the quality, the compliance of that. And that's huge. That's huge. And I don't want that to get missed here because there are not a lot of systems that have a fully integrated shrink wrap out of the box system that has it all that way,
And Tim, you've talked about the price on the back end, and you can't, whoever it is, whether it's the warehouse bank, the investor, doesn't make any difference. Whoever it is has to feel more comfortable about something that they can be verified without question. So there is benefits and cost there. There's also just the cost of manufacturing it, and I can assure anyone that's listening to us that the cost with Mortgage Machine is going to be less. It's not a little bit. It's significantly less than what others are paying for a cost to manufacture a mortgage. So, Tim, I would say that you and I have laughed about this many times. We talked about, as you said in the very beginning of the call, 3 to 5 years, everyone's going to be producing eNotes and eClosing, and we're still waiting on that to happen. However, I think my opinion is that certainly with the emergence of AI and what it can do for software, I mean, you don't have to just look at the software that we're talking about. You can look at any software, and especially outside of the mortgage industry. I mean, all the ERP software solutions and the people that are, it's all about the efficiency. We haven't really talked about that in Mortgage Machine, but that's one of its strengths, the efficiency and how quickly it operates. All the users that use it say the same thing. It's extremely quick. They talk about the large systems. They talk about having to have clean data, clean core. They talk about having to have, the where you can verify things. And right now, what we're saying to the community out there is that this system can offer you that. So any final thoughts that you have, Tim, to put a bow on this for these folks?
Yeah, I'll put in a concept about a couple of years ago when blockchain was saying that, this is going to be the best thing since cure cancer or sliced bread. This, blockchain has a neat idea with distributed data. So, you can't hack it and it's secure, but it has, what we're doing here is we're creating a digital asset from app to investor to servicing all the way through that is verifiable, that's transparent for all users, that has electronic evidence of compliance with a data and doc audit trail, the provability. So what people need to understand is not about efficiency, but in 10 years, someone comes back and said, how do you know that you disclosed the LD or the CD properly? Because now somebody's going to, sue me. Go right to the vault and there it is. I've already showed we've had a couple lawsuits already and protected the originator of that document because it was done electronically. So if you think in the digital world, and the neat thing about all consumers, they're out there already in the digital world, so that they want it online already, right? So go where the customers are, but you're creating a verifiable, provable digital asset that actually should be worth more than it's kind of paper, PDF, paper and out scanning, and I call it the Humpty Dumpty complex, right? Because we have in a system record pretty well current, but when you go to closing, Humpty Dumpty takes a big fall. And on the back end, all the king's horses and all the king's men can't put Humpty Dumpty back together again. But that's the process today. Even if you've got OCR and AI, if you don't get the documents that were originally signed back in the system that are readable, and I have to go back and retrieve them, that's where things break down. And that in this system, we never lose control over that. Yeah, that's the big deal.
Oh, that's fantastic. Well, folks, Crystal, if you'll put up our contact information, I'd appreciate it. Thank you very much for joining us. If you have some questions, please reach out to me. I'll be happy to answer any questions that you have, and hope that we can impress you with Mortgage Machine. It's really a slick system that is very efficient. And Tim, a special thanks to you, sir. I always enjoy listening to you, and thank you for joining Crystal and myself, and we really appreciate it. You folks have a great day, and thank you so much.